Alright, the stock that I've chosen to do my report on is Cisco. So just getting right into it, my rating for Cisco would be to hold. The reason being is because Cisco owns more than 50% of its market share. It's in the technology market, specifically in internet type of utility. And in this past few quarters, it has been making a lot of large investments, trying to improve their share of a different market, working on the cloud technology, as well as one of their products, which is called the Internet of Things. So it's just the ability to analyze data from a large variety of applications just using sensors, and then using their data analytics tools, they bring real-time data to small business owners, even large business owners as well. So because of those large investments, they did notice a drop in the past couple quarters, especially in their profit margin. But over the long run, this is going to be a steady company that will make lots of money for you as an investor. Not as heavy or as quick as some of these upcoming companies or the new companies. This is more of a Coca-Cola type stock that the longer that you're in it, you will get those consistent gains. So the current price Cisco is at right now is $45.60. So as you can see, this is a 5-year graph. They are still on the high end of their stock price. The only time it's been higher than this was in the dot-com boom of the late 90s and early 2000s, where it was around $80 per share. But compared to the market, this is a good price. The percent change, if you look compared to its major competitors, which are Intel, Microsoft, Oracle, Qualcomm, and IBM. This is just a graph showing the percentage of price change throughout the past 5 years. And Cisco is number 2 out of those 5 competitors, being bested only by Microsoft. So Cisco's price has increased by 114.8% since 5 years ago today, so 2014 or 13, I mean. So the history, and it is expected to continue to increase. The future price will increase because of these investments that they're doing to get into other markets. It will continue to increase. The 5-year history as far as the profit margin goes, so it's down. The profit margin is down, the net profit margin, but the reason being is, like I said, because of all the funds that they've been using to invest into other things. As you can see, your gross margin is still very high at 62%. The operating margin hasn't varied much, in between 22 and 26% over the past 5 years. The only place that we see a big difference is the net profit margin, and that is just because of those big purchases that they've been having to increase profitability down the road. As far as the return on equity goes, it has been pretty consistent throughout the years. Once again, with that blip that we've seen in this past couple quarters with those new investments, that the ROE has dropped, but the earnings per share has stayed pretty consistent throughout the years as well. And that's why most people like Cisco. It's a part of most of the big indexes. It has a lot of influence in the market, but because of its consistency, its sales are always really high. It doesn't see a lot of fluctuation to go up or down, so it's more just a breadwinner, a very consistent stock. Compared to its competitors, I showed you the comparison on price, profit margin. It is competitive. It's in the about average for its industry on its profit margin. As you can see here, this is just over the past 5 years, the percentage change of profit margin, and Cisco is number 3 out of 5 on those. And then but according to analysts, they would support my rating of a hold. I just wanted to quote one of the analysts. And they said Cisco stock is for investors. It won't make you rich, but it will hold its value. In thin times and flush, it won't deliver huge capital gains, but Cisco stock does deliver steady income. As America's baby boomers age from work to retirement, from searching for capital gains to cash, that's going to be appreciated. So once again, it's the analysts. I agree with the analysts. The analysts agree with my recommendation that Cisco is a hold stock because of its consistency throughout the years, its long-term vision to increase profitability, and its large market share that it has. Trying to get into different markets will also help improve its overall sales is the goal, and improve the earnings per share and the ROE. So that is Cisco. My recommendation is to hold.